Buyers in Denver are walking away from contracts in record numbers. Nearly 1 in every 5 homes under contract right now never makes it to closing. That's double what I've seen in previous years. So in this video, I'll break down why this is happening, reasons from rising mortgage rates, financing fallout to inspection battles, and sellers still pricing their homes like it's 2022. We'll cover which price points are getting hit hardest and what this means if you're buying or selling right now, and how to make smart decisions in a market full of uncertainty. So if you're wondering what the heck is going on with Denver real estate in 2025, this will give you a full picture. So let's dig in. So Inman News just came out with a recent article that said that Denver is one of the top 10 markets for price reductions. And we're also seeing a big gap between pending sales and actual closings. The data is showing that approximately 20% of all pending contracts are failing to close right now. And it's like I said, this is nearly double the fallout rate compared to 2022, even just 3 years ago. So mid-range homes are experiencing the highest termination rates. And we mean that $500,000 to $800,000 range. And the average time between contract to closing has extended from 30 days. Now it's closer to 45 days in a lot of these transactions because of inspection items that end up being a little more severe than what was thought beforehand. There's also lending issues that run into longer timetables. And those issues just make things take a little bit longer. I actually had a deal just terminate on a listing of mine. A great home in a great area, and buyers were excited about the home. They wanted to buy the home, and they were getting a little bit of help from grandma to be able to purchase this property. And grandma had gotten a cashier's check, gave her funds to the title company, was all ready to go. But grandma was not a fan of people prying into her personal bank accounts and having to trace that the funds had left her account for a lending requirement. Grandma said, nope, I know my money's there at the title company, but I do not want anyone pouring through my accounts, and I don't want to show any statement with my account number and my name attached to it. And the deal terminated, unfortunately. So you have reasons that are a little more bizarre like that. I'd never seen that in 18 years of doing this. And you have other reasons that are just people losing jobs, for example, or people having income cuts, right? With business owners laying people off, that's having a big impact with job security right now. And so that's a big reason why some of these deals are terminating. However, most of these deals are terminating based on inspection. And overall, 15% of deals terminate in that inspection window, which is usually in the first 10 days of the contract, roughly. When that happens, usually it's because, buyers have already negotiated a deal with the sellers. They've got to a price. Maybe there's some concessions or a rate buy down involved. And then on top of that, now the buyers are asking for older HVAC to be fixed, right? Or they're asking for electrical, plumbing issues on a bigger scale. It may be something that they didn't notice, like even like a carpet stain in the basement, that they're asking for in this type of a market. So when that happens, sometimes sellers dig their heels and there's an impasse. There's just a line in the sand that's drawn, and that negotiation stops and the termination sent over. So if you were to ask, what percentage of buyers are citing financing or their loan as a reason for backing out, I think it's kind of two-sided, right? You have the people that back out because of cold feet financially, or financial cold feet, if you want to call it that. And that's people that back out in that first 7 days just because they get into it and then they start really breaking down payments with their lender. Even though, in my opinion, you should do that before you go out and start looking at homes. And as you get that pre-approval letter, you should know what your payment might be. But there's still a lot of people that don't look into that soon enough. And then they get out, they get a home under contract, and then they start looking into things more and they're like, oh, we can't make this payment. We can't afford this. With the lifestyle we want to live, it's not worth it for us to move forward. This creates a ripple effect through the entire market because when properties come back online, they typically sit longer the next time around and they often end up selling for less than the original contract price. So what's the driving dramatic shift in buyer behavior? The number one culprit might be obvious if you've been watching the financial markets. So if you look at the rates increasing, right, we had the fastest rate hike in history, right, from February to May of 2022. And during that time frame, we grew 1% per month for 3 months. So 3% increase is huge. You can imagine what would happen if we went down 3%, right? The market would just go on fire. And that's what I know Trump said he wants to do, is go down 3.5%, 350 basis points. But if we had 3.25% interest rates again, we would be seeing crazy multiple offers. And the reason is because we have one of the highest buyer populations right now for first-time home buyers. It's comparable to the height of the baby boomers. The population size is there. We have real demand. What we don't have is affordability, right? We have people that can't afford the average payment. That's the biggest holdup and the biggest hang up in our market right now. And what's decreasing the amount of showings, the amount of contracts that are happening, and bringing volume down, 15% year over year for 3 years in a row these last 3 years. So at the time of shooting this video, interest rates are at 6.78%, and they've actually come down a little bit, in the past few weeks. We're seeing some good signs, and in that time frame, buyers' purchase power, meaning if they were qualified for $700,000 before when rates were at 7.25 roughly, now they're qualified for up to $725,000. So it's made about a $20,000 to $25,000 difference for a lot of buyers in their ability to purchase a home, which has been great. So hopefully we'll continue to see rates soften, and come down. But again, there's no guarantees as far as what interest rates are going to do. Mortgage rates have risen significantly in 2025. And a buyer that was pre-approved at lower rates may not qualify. Monthly payments on a medium-priced Denver home have increased by $600 to $800 because of rate increases. Many buyers are getting payment shock when updating pre-approvals, and approximately 35% of contract termination cite financial issues. Buying power has decreased by 20 to 25% for the average buyer over the course of the year. And some buyers are exploring alternative financing like adjustable rate mortgages or ARMs. I recently had clients who were pre-approved to purchase a $750,000 home when rates were lower. But by the time they found the right property and got under contract, the new rate meant that they only qualified for about $600,000. They had to terminate the contract because they simply couldn't make the numbers work. Buyers aren't just being cautious. Many are literally hitting the ceiling of what lenders will approve them for. While financing challenges are breaking many deals, buyers who can still afford the payments are finding other reasons to walk away. The other biggest reason why deals are falling through is inspection and appraisals. So whenever you're in a declining market, we'll talk about appraisals first. Sometimes appraisers are not appraising homes for that price, especially if the appraiser sees this market as a declining market. He's really reducing the amount that he'll approve that home to be valued at. And that home has to be valued at a certain number by the lender whenever there's a lender involved, for that lender to lend on that money. Let's just say a buyer is qualified for a $600,000 home. They're putting 10% down, so $60,000 down, and financing $540,000. So when that happens, there are a couple options of what the solutions can be. One thing that can happen is the seller can come down to the appraised price at $570, right? Then the buyer's super happy. Seller's not very happy because they just lost $30,000. The other thing that can happen is the buyer can now bring cash to close the gap, right? So that $30,000 of gap now, he can bring extra cash, or she can bring extra cash to close that gap and still make the deal work. And then the last thing that can happen is there can be some kind of meeting in the middle, right? The seller could come down to $585,000 and the buyer could bring an additional $15,000 in cash than what they were planning on bringing. In this market though, when it's a buyer's market, typically, buyers aren't willing to pay more than appraised price to a certain extent, unless they just feel like the appraiser was way off base. I will say, in my experience, even in today's market, this is only happening probably 1 in every 20 homes where appraisals are coming low. Usually appraisers are still getting to the number and appraising homes for the contract price. Rarely do they go higher than that. Usually they just get right to the contract price if they feel like they have comparable properties that are justifiable within that radius that they're looking at. How have negotiations changed as far as inspections go? We came out of a pandemic market, right, where people were just scratching and clawing to get into homes, and you were almost afraid to ask for things, on the inspection, because buyers were like, I'm so lucky to just have a home to buy. And oftentimes they pre-negotiated to waive their inspection and waive their appraisal. However, the tides have turned. Right? Buyers are now seeing opportunities to ask for HVAC, like furnaces and ACs that are just older. They may not be broken, but they're older, they're past their useful life, and so they're asking for either a credit or replacement on those items. Also, we're seeing a lot of grading issues coming up on homes, right? So if grading is sloping into the home at all, buyers are calling that out and asking for that to be regraded, and sometimes concrete poured again, especially on garage floors or driveways. Anytime water is being funneled into the foundation, we're seeing a lot of that being brought up on inspections right now. So some are minor, some are costly as far as items go, but overall, we're just seeing buyers ask for more and sellers that are actually willing to do it because of a fear of going back on the market. We're seeing a lot more sellers take action on those things and take it seriously because they were on the market for a while before they got an offer. They're grateful to have an offer and they don't want to lose them. About 25% of terminated contracts cite inspection issues as the primary cause. Roof, foundation, and major system repairs are common deal breakers. One of my listings recently had a buyer ask for $32,000 in repairs after inspection. And when my seller only offered $5,000, the buyer terminated immediately. Also, appraisals are another reason why some deals are falling through, but at much lower levels. The primary two reasons are financing issues and inspections. And then appraisals tend to come in low about 5% of the time. And you'll see buyers back out because they don't want to cover that gap and the seller's not willing to come down to meet the appraised price. A year ago, buyers might cover the $20,000 appraisal gap without blinking, but now they're terminating contracts over $5,000 gaps. And this represents a complete reversal of negotiation leverage from what we saw in 2022. This shift in power is creating a serious reality check for many sellers who haven't adjusted to their expectations. So it's definitely fair to say that sellers' expectations are a little bit misaligned in the current market. It wasn't that long ago in their minds that we were, getting multiple offers on homes, and they heard about their neighbors going for a very high number in the community. And it's hard to imagine your home's value going down because if you look at a chart over the last 50 years, almost every year it's gone up, other than the Great Recession. And really, if you go back 100 years, the Great Depression and the Great Recession, it is very strange in Denver for home values to go south and be in the red. Right now, also, homes are sitting on the market for 27% longer than they were in 2024. Condos are sitting on the market for 78% longer than they were last year this time. So they've had the biggest hit as far as days on market goes, and it's just taking a lot longer for them to close. Part of that is the HOAs and what they're doing right now as far as slowing deals down. Whenever there's a special assessment or a roof that needs to be replaced in the HOA, they are creating more issues that's making closings longer at this point. So I had several homes, during the great seller's market that we had in 2020 and 2021, where a buyer would ask us for a few things and the seller would just say, no, I'm not going to do it. Right? Or I'll do one out of the 6 items that you asked for, but that's it. Back then, buyers would still just trudge forward and get the deal done. But in this market today, if sellers refuse to negotiate on some of these items, buyers just say, okay, well, I'll catch you on the next one. And they go out and they look at the next home that their agent sends them. And with 13,200 homes on the market available, they've got options. So they have plenty of homes that they can go see and look at. And so, for sellers, when you have a buyer that's emotionally invested in your home and you have a contract with that buyer, I'm seeing sellers do whatever they can to keep that contract in place. There's absolutely a FOMO of going back on the market right now because in a buyer's market, you tend to get less the next time you come back on the market, and it tends to take longer to sell the next time. Not to mention, me as the listing agent, I get to explain to everybody why the home fell through on the market, and we have to disclose properly by law any material defect that we know of from the previous inspection results. So it is not a fun process going back on the market. So if you can keep a deal together, that's the way to go if you're a home seller right now. The other thing is most listing agents are doing a terrible job of adapting to pricing strategies. And the sad thing is when I talk to several agents across the country through training programs I've been in, whenever I ask about their market, they'll speak in generalities. And they won't tell me like what the number is. What's the year over year appreciation? Where's inventory at compared to last year? What percentage has changed in days on market right now? Most agents don't know their numbers. And that's the sad thing, right? There's a very big discrepancy between an agent that's really on it and knows their numbers and one that's not. And unfortunately right now, there are a lot of listing agents in our market that don't understand all these things that I'm telling you. They don't know what's going on. And so they continue to price homes high and lean into whatever their sellers are telling them their home's worth, and they're not telling them the honest truth up front. They would rather get the listing, right, and then react to it later. And I've just been down that road too many times. It's so painful to watch a home sit on the market, and it's just so easy for a homeowner to get grouchy after a while, right? After you show your home for months on end, that is not a fun process. It's miserable, especially if you have kids or pets and you're trying to work around work schedules and all that. It's like not fun at all. So I've learned over experience of doing this for 18 years and helping 1,000 people through this process. It is so much more enjoyable and a better process, and actually better outcome for net bottom line for homeowners when we start at the correct price and adjust for market conditions. And then we negotiate, reasonably with buyers, understanding the market. We can give on some things and then really try to build that relationship of trust high with the buyers by having great communication. And typically there's just a much better result on a homeowner's bottom line when that happens. And if you'd like to talk more about that with your specific home, my number is right here below, and I'm happy to learn more about your specific situation. I'd love to talk through, your plans, whether you're, on the market or looking to be on the market here in the next year or two, and just planning to prep your home right. That's something I'm always open to chatting about. Days on market have increased from 7 days in 2022 during the hottest market that we had up to 45 days now on average. And so you're seeing a big gap between single family and condos and townhomes too. Single family homes are selling in 33 days on average. Condos and townhomes, 55 days on average. So they are definitely on a shelf as far as, taking longer to sell. And that is highly driven by the affordability issues that the lower end buyers are having right now. Sellers who refuse to negotiate at all typically see their homes sit for 60 plus days on the market and often come back on the market after they've been under contract. Realistic pricing from the start results in faster sales and often higher final prices. One of the biggest issues that I'm seeing is sellers who are mentally stuck in 2022. They remember the neighbor's house selling in a weekend with multiple offers for over asking price. And they expect the same experience right now in 2025. And the reality couldn't be more different. The painful truth is that sellers who refuse to acknowledge the market shift are ultimately hurting themselves. This adjustment in seller expectations is happening against a backdrop of changing inventory levels, which is another key factor in this equation. So we've seen a pretty big change just this year in housing inventory. We've gone from the start of the year where we started around 8,000 listings on the market all the way up to 13,400 listings in our recent numbers that are on the market actively trying to sell. And so with that change, you're seeing some neighborhoods change more than others. So you've got cities that have a lot of new construction in those cities. They're also making it harder for resales to actually sell and close because of all the permanent buy down rates that they're offering. And so some of those areas are getting a little more saturated, seeing less showing counts. And, a lot of it is on that east side of town. So Parker, Castle Rock on the south side, and then Aurora are really struggling to keep up with that new construction and all the incentives that are offered there. During that low inventory time that we had from 2012 up to 2019, we had anywhere from 8,500 to all the way down to about 3,500 homes on the market as a whole. Then we got to the pandemic and things just went down as far as inventory goes to a halt. We had 1,200 homes total on the market in 2020 and 2021. And those levels were just unbelievably low. It was crisis mode. And then we saw those come out and change quite dramatically here in the last couple of years to the point where we're over 13,000 homes on the market now. The price points that have seen the most inventory are actually condos and townhomes. So in those ranges, we're seeing more sellers kind of hit the panic button and say, I got to get this sold before, values drop even more. And we've seen those go down 5% in value over the last year. So you may ask, how is this affecting buyer behavior nowadays? With inventory being higher, buyers just kind of have the attitude of, I'm just going to wait till the next one. If this one doesn't work out, then I have poise, I can wait till the next one, unless they have some kind of time crunch in their life that makes them a little more motivated. Most buyers are taking that approach. And, Warren Buffett would always say, you'll run out of money before you'll run out of homes to buy. And that's very true. If you have poise as a buyer, you can absolutely land a great deal, especially in this market. Believe it or not, we are actually still seeing some multiple offer situations. And it has to do with great preparation from sellers, great pricing strategy from a listing agent and a seller. And that can still create undesirable areas, locations within communities, some multiple offer situations. And we've been on both sides of that this year, on the listing side and also on buyers who have won multiple offer situations and also missed out on a couple. So we used to have buyer FOMO, right? The fear of missing out in the market. That's now been replaced by fear of overpaying in the market. The inventory situation in Denver has undergone a fundamental shift that's giving buyers more confidence to walk away from deals that don't meet their needs. The luxury market and condos and townhomes have probably seen the most increases in inventory as far as price point segments go right now. And this changing inventory dynamic means buyers no longer feel that desperate pressure to make compromises. They know that if they terminate a contract, there will be other options. The power dynamic has shifted and buyers know it. This shift in power is most evident when we look at how common price reductions have become. So approximately 60% of the entire market is experiencing at least one price reduction if you're for sale right now. And that is a very big number. The average reduction is anywhere from 1 to 2% in most cases of the purchase price. And most of these reductions happen after 14 to 21 days on the market. Homes typically take 2 to 3 price reductions before selling and then take a little less than that from their final list price. Price reductions are most common in that $700,000 to $1 million range right now. Homes that are reduced in price are receiving offers that are 2 to 4% below the reduced price on average. I was looking at the Centennial market last week and was shocked to see that they have 62% of active listings have had at least one price cut. What's really interesting is what happens after the price reduction. Buyers are seeing these price cuts as just a starting point for negotiations. A home that was originally $800,000 and gets reduced to $760,000 may now be getting offers around $725,000. Some buyers are interpreting price reductions as a signal that sellers might be desperate. However, I've seen that these tactics of reducing price every 14 to 30 days do get you to where you need to get to create the proper showing count and get buyers that are willing to actually write a contract on your home. It's definitely ideal to go on the market without any price adjustments. Price adjustments can be a good marketing tactic and they can create more showings and buyers, but it also can create a negative feedback loop where each failed contract or price reduction weakens the seller's position for the next round of showings. With all these factors in play, what does this mean for you, whether you're buying or selling in today's Denver market? So if I'm a buyer in today's market, I would absolutely understand the market conditions. Work with a pro that knows the numbers, and you can negotiate on each part of the transaction, on the initial contract price, on concessions, on the inspection, and possibly even on the appraisal if it comes in low. If you're a seller, we have to make sure that you price your home properly, right? That's number one. And prep it properly to sell. It's never been more important to do that. I get asked a lot, and a lot of our buyers have told us, we're gonna wait till next year before we buy. And as far as that strategy, I don't know if that's a good one. I'm not sure what next year is gonna look like, but I know right now I'm seeing some negotiation power that buyers haven't had in over 10 years. So it is a great time to buy right now. And I would take advantage of the time that you have. If you can afford the payments that you'll have and you've looked into that, I think it's a great time to look into buying a home. And I think, as far as a pricing strategy that works best for sellers in today's market, I would just start with where you think the comps are and then take, anywhere from 2 to 4% off of that, and then start with that as your first price. That way you're not chasing the market downward. But you can get ahead of the market, price in a spot where you've got buyers that are coming to you, that are interested and potentially even competing with each other. Negotiations are absolutely different than they were even a year ago. So we're seeing, much more, happening on the inspection side of things, especially. And so you just have to be prepared for that. Understand that there may be some pain points as a seller, and understand there may be some opportunities as a buyer from the negotiations in this market. So I think one of the biggest risks for buyers right now in today's market is we have more options, we have more selection. So don't go out and buy a location that's a poor location, in a market where there's plenty to choose from. And so I think that just being very selective on location is the most important thing that you can do to avoid risk as a buyer right now. So risks for sellers, if you've got a very tight bottom line you're trying to hit, I absolutely think that it's smart to have, some understanding of the market and understand that it may not work out. It's a little more of an unpredictable market. We were very dialed in on what would happen back in 2021, 22. But in this time frame, there are some surprises, more surprises than I've seen in the past, that just don't line up with the science and what we've done as far as research goes, prepping a listing, most of them are still going how we think they will, but there are some that just go a completely different way. So you just have to be a little more prepared for that and a little more flexible as a seller right now. If you're a buyer, you're in the strongest position you've been in years, and you can negotiate repairs, you can take your time, and you can have options. But this doesn't mean that you should wait indefinitely or submit lowball offers on everything. Well-priced move-in ready homes are still selling quickly, so pay attention to the comparables. And the sweet spot is finding homes that have been on the market for 30 to 45 days plus that have already taken a price reduction. These sellers are often much more flexible. For sellers, it's time for a reality check. The days of setting aspirational prices and expecting buyers to compete over them are over. The most successful selling strategy right now is to price slightly below the most recent comparable sales. Yes, below them. This creates urgency and often results in a faster sale at a better price than starting high and chasing the market down with price reductions. You also need to budget for inspection items and be prepared to negotiate. Homes that show like model homes are still commanding premiums, so investing in pre-listing improvements has never been more important. The market isn't crashing, it's normalizing. And understanding these new dynamics is crucial whether you're buying or selling in Denver today. If you're thinking about making a move in this challenging market, having an agent who understands these shifts is more important than ever. And I help buyers and sellers navigate these exact challenges every day. And my contact info is right here in the description. If you'd like to discuss your specific situation, I'd be more than happy to do that. And if you found this breakdown helpful, don't miss my next video. I dive into what's actually worth buying in Denver's 2025 market. Whether you're investing, upsizing, or just trying to play it smart, this will help you spot the real opportunities. Click right here and I'll see you there.